Hey everyone, me Kevin here. Should you buy a Nio stock? That is the question of today's video. And how does Nio compare to Tesla? Quick reminder, all of the spreadsheets that we talk about in this video and every resource that went into this video will be posted in my Stock and Psychology of Money course by tomorrow morning. So if you want to check out my programs on helping you build wealth and learning how to do these analyses yourself, check out that coupon code down below and consider joining. Nio is exploding. Nio is a Chinese EV manufacturer that is being heralded as the next Tesla of China. Nio doubled since I said I was going to buy the stock around $24 per share, but at the time of this recording, Nio has already 10x'd its stock price since January. People are now wondering, wow, what is Nio and what do I need to do to get into this exponential growth as soon as possible? Morgan Stanley is bullish on Nio, JP Morgan is bullish on Nio, Bank of America is bullish on Nio, and Jim Cramer on CNBC's Mad Money has people from Navy ships on the other side of the planet asking him if they should put their savings into Nio stock. And for 2020, Nio investors have been handsomely rewarded. But what's behind Nio, and is it a buy today? Does the valuation even matter at Nio, and what makes them so special? Are they more expensive than Tesla, or is Tesla a better deal? Well, let's answer all of those questions right now. First, people call Nio the Tesla of China. When Tesla delivered 12,103 Model 3s in China, delivering a new record for EV vehicles delivered in 1 month in October, Tesla's total sales went up to 94,000 for the year, and Nio jumped immediately, and so did companies like Xpeng Motors and Li Auto. It's clear that sentiments are shifting around EVs, and the better Tesla does, the more people get excited for these other companies like Nio and Xpeng. And this is leading a ton of money flowing right into the EV space. After all, shares of battery charging companies are skyrocketing, and even shell companies, like literally shell companies with no profits from EVs or batteries, are all of a sudden marketing themselves as battery charging companies and then literally skyrocketing. So I'm not going to mention any names here, but there's literally a company that sells solar panels whose sales have been declining for months and months and months and years and years and years. They said, hey, we're going to get into making battery electric vehicle charging stations, and their stock skyrocketed. So there's clearly an EV frenzy going on. There's no joke. Some people even call it a bubble. And it's seen by, well, basically anytime there's a new EV opportunity, the stock blows up. And so what's to stop it from blowing up again? Certainly the bubble will never pop. Well, rather than talking about an EV bubble, let's right now just focus on Nio. So Nio sells 3 main cars, an EC6, an ES8, and an ES6. These are all SUV-style vehicles. Nio does not yet have a sedan, and this helps keep Nio's average selling price per vehicle just above $51,000 per vehicle. Now, Nio does have plans to compete with Tesla in the sedan space. In 2021, Nio plans to introduce up to 2 new sedan models to compete in the sedan market with Tesla's Model 3, something that Nio actually sees as crucial to, quote, completing their portfolio. Nio also pioneers something called BaaS, or Battery as a Service. Now, this technology allows customers to drive up to a Nio station and in under 3 minutes, sometimes in as little as 90 seconds, be able to swap the battery in their vehicle and drive off again. This would kind of be like going to a gas station with an empty tank and literally getting a full tank in potentially as little as 90 seconds. Now, Nio also just launched a newer 100 kilowatt hour battery pack, which is 25 kilowatt hours larger than their standard 75 kilowatt hour battery pack. And Nio offers a subscription service that allows people to pay for a larger battery when they want it. So if you pay for the subscription, you could literally say, hey, I'm going on a vacation, I'm going on a road trip, let me get the bigger battery pack, boom, 3 minutes, it's installed, it's fully charged, boom, you're going on your trip. Nio says as many as 35% of their existing customers are already interested in going from their existing 75 kilowatt hour pack to the 100 pack. And this makes Nio investors very excited. In fact, Nio themselves says, hey, you know, all this is doing is saying, look, We got a 75 kilowatt hour pack. You can buy into the EV space. You used to be used to gas. Hey, why don't you try having a car with a 75 kilowatt hour pack? And if you want, you can always upgrade to the bigger pack in the future. It's kind of brilliant, especially since this is a subscription service that Nio offers. It's a great way to increase their revenue flow. And they're not shy about any of this. In fact, Nio specifically says one of their main goals right now is converting people from gas cars to electric. In fact, in their latest earnings call, they were asked, aren't you worried about Tesla introducing the Model Y to China to compete with your SUVs? And guess what Nio said? They said, no. They actually welcome Tesla's expansion because they see that the more work Tesla does in China, the more they, quote, grow the pie, and the bigger Nio's slice of the pie is. Because as the pie grows, the piece of pie that you got ends up a little larger. So Nio thinks they're just a great alternative to Tesla, and once people start thinking about battery electric vehicles, they'll give Nio a shot. Now, Nio actually slams Tesla though, because Tesla has been cutting the prices of their vehicles pretty consistently. Nio said during the first round of price cuts this year, Nio's sales actually declined about 10%. But after further price cuts, Nio's sales actually weren't impacted. And so Nio actually thinks, hey, you know what? Maybe Tesla and Nio customers are different. Now, this is very different from what a company like ARK Invest thinks. See, ARK Invest disagrees with this strategy. ARK Invest suggests that the EV space is going to be one of those winner-take-all environments. And keep in mind, both Tesla and Nio are interested in introducing robo-taxis. Tesla potentially as soon as 2022 and Nio as soon as 2023. So in ARK Invest's opinion, Tesla will end up taking over and dominating the Chinese space. So this obviously leads to a lot of questions. Right now, Tesla only has 10% of the Chinese battery electric vehicle market share. When Xpeng produces 25% of what Tesla produces, you realize there's actually a lot of competition here. And Tesla argues, hey, you know what? Don't worry, we're gonna scale this to where we're producing the vast majority of the market. Right now, in October, 121,000 electric vehicles were sold in China, and Tesla only had a paltry 12,000 of those. Now, Tesla does say with their Shanghai facility, don't worry, we're getting to the point where we can produce 80,000 cars in China in just 1 month. That's on scale with about 1 million vehicles per year out of their Shanghai Gigafactory. And there's no doubt that Tesla is going to ramp up their production faster than everybody else will. But will this be a winner-take-all situation? Nio investors think not. Nio investors say that Nio's battery as a service business is innovative and will keep differentiating Nio from Tesla. Where Tesla might have the supercharger network, Nio will just give you a brand new filled up battery. Nio will also have Nio Day coming up on January 9th, which in 2021, which is bound to be full of insane hype and speculation. So there is potentially the play that you could buy Nio stock between now and January 8th and do the sort of buy the rumor, sell the news kind of play. We'll see though. At Nio Day on January 9th, Nio promises to unveil a new self-driving technology they call Nio Pilot 2.0, or NP 2.0. And remember, Nio loves the subscription model, and it doesn't just stop at batteries, it extends to potentially autopilot services as well. This is something they believe will make their revenues lower earlier on, but down the road, revenues will explode thanks to their software as a service style business model. Just to give you another example, Nio has mobile charging vehicles that could literally come to your Nio car as a truck, give you some juice, and then drive off to go charge someone else's car to help deal with range anxiety. This is how they're literally trying to do anything they can to convert people from gas cars to electric cars. Nio's autopilot hardware also currently consists of mobilized chips, which are actually owned by Intel, and these are the same chips that Tesla used to use back in 2016 when Tesla had that famous Harry Potter accident you can Google about. But Tesla claims that these Mobileye chips are way less energy efficient than Tesla's chips, and Elon Musk even subtly slammed Nio when Tesla was at $420 per share and Nio was at $42, saying $420 is still 10x 42. But Elon Musk can often be seen as a little bit stubborn. For example, Nio doesn't like or find a place for LiDAR technology, also known as light detection and ranging devices. But we're seeing a lot of companies like Xpeng and Nio say, hey, we're actually really open to LiDAR. Specifically on Nio, Nio says LiDAR could be really useful in certain edge case scenarios to get to full self-driving, which it's potentially possible that Tesla might not be able to get to that complete full-level self-driving technology without LiDAR, which Nio is open to using. Now, on the flip side, Tesla's already releasing their self-driving technology, fully self-driving, as a beta to their customers. So obviously Elon disagrees here. Now, Tesla also produces its own vehicles in its own factories and prides itself on producing the machine that builds the machine to make the car. All of this vertical integration at Tesla can be seen when you see Tesla talk about building Tesla semis or coming out with Tesla insurance services or Tesla's solar company and then their power packs that they sell so people can store the energy they create. It's insane. Instead, Nio's a little bit different here. Nio has a 5-year contract ending in 2023 with JAC, a Chinese state-owned manufacturing company for cars. With Tesla, you get the vertical integration. With Nio, you get cars being sold, but you don't actually get the factory technology. Now, Nio says this actually helps them with their margins because they don't have to spend on those efficiency increases, but they might also not benefit as much from those efficiency increases as JAC tries to take more profits. Now, Chinese investors like to say that, come on, let's be real, the Chinese Communist Party is going to favor Chinese companies, and therefore you're going to see them do whatever they can to make sure Nio succeeds. So you got a lot of things to think about here, but Nio says, don't worry, their margin will be improving substantially moving forward, especially when you consider their battery as a service technology, which again, Tesla does not have. So, where does Nio stand financially? Well, Nio right now produces just over 5,000 vehicles per month. This was groundbreaking and helped their stock skyrocket just in the last 30 days. They're also confident they can produce 7,500 vehicles per month soon, which puts them on scale to produce 90,000 vehicles per year. Now, that's pretty different from the 1 million vehicles per year that Tesla wants to produce in China. But Nio says, hey, don't worry, we're working on it. It's taking time though, mostly because right now we look at our orders and people have to wait more than a month to get their car. They don't think this is good for customer service, and they're trying to do whatever they can to get this delivery time to under 4 weeks. 3 to 4 weeks is their ideal. Tesla has that ideal as well, but when you look at most of their cars, you gotta wait 5 to 8 weeks to actually get the car delivered. This is just pretty common right now in the EV space as everybody's trying to ramp up at the same time. So, either way you slice this, Nio is a growing competitor to Tesla, but they are a fraction of the size. Probably once they both get to scale in China, Tesla's still gonna be 10x the size of Nio. But hey, percentages are relative. So instead of thinking about those, let's get into the financials for Nio and compare those to the financials for Tesla. Quick reminder, like I said earlier, all of these financials and how I broke these down will be in my Psychology of Money and Stocks course under the financial or fundamentals analysis for companies. So you'll be able to see that there. For right now though, let's hit some of the bottom lines. Now the first thing that's good to note at Nio is you absolutely have an increasing amount of vehicle sales. If you look at the quarters, they sold obviously, as you would expect, the most amount of vehicles in Q3 2020. They did have a substantial decline in sales in Q1. So expect another potential drop in Q1 coming up in 2021. But the big thing that's happening here at Nio is the average selling prices for their vehicles are consistently trending up. And this is because they introduced the ES8, which is a more expensive vehicle. However, they'll be introducing 2 cheaper sedans in 2021. So you might have some margin compression, though Nio says, hey, but we're gonna have our battery as a service technology offset that. So right here on the left, what I have is the 2020 Q3 earnings, which is just straight from the earnings report. And what I did is I took some of this data, like their percentages and margins, and used that to kind of make a projection for 2022 and 2023. Now, I'm not going to talk about both of these projections, so I'm just going to focus on 2023 right now. And I'll talk to you about the specific assumptions that I made. The first assumption is that by 2023, Nio can produce 10,000 vehicles per month. That would be 120,000 vehicles per year. If they can do this, and if they can maintain their high average selling price, which could be an asterisk if they introduce cheaper sedans, we'll see what price they introduce them for. It's going to matter, but I'll tell you what matters more in just a moment. If they sell them for about 50,000 USDs, then they could see revenues of about $6 billion. They do have other sales, which I calculated as a percentage of what they'd previously done. Now, but the biggest thing here is obviously vehicle sales, so that's what we'll focus on. When we look at total revenues and the expenses for these revenues, right now, their vehicle margin is about 14.5%. In fact, you can see that 14.5% by zooming in over here. So you see that 94% of their revenue comes from vehicles, and their margin is about 14.5%, which is not bad. It's substantially exploded from what their margin used to be. So for 2023, I'm going to assume that their vehicle margin is 22%. That means the amount of money they can bring to the bottom line grows to 22%. Well, not the bottom line, but sort of the gross profit line for vehicle margin. If we get to 22%, then we could see a gross profit of around $1.5 billion in 2023 for Nio. Now, we're going to have to take off research and development, which has consistently been around 10%. So you'll see that here, it was around 13% in the last quarter. But with larger revenues, I'm going to push this down to 10% for a percentage of revenues. Their selling, general, and administrative expenses were 20% in Q3, but as their revenues explode, I expect this percentage to go down to 10%. So these are assumptions I'm making here, especially these yellow ones. These are big. The SG&A, big assumptions here, and margin. That's where you got to pay attention to if you are a Nio investor, those two lines right here. If we get to these numbers, and we subtract out all of these expenses, we would get to a net profit of somewhere around $228 million for Nio for the year of 2023. Okay, great. Well, with the amount of shares that we have outstanding now, we would have this net profit of $228 to shareholders, which would lead to an earnings per share amount of roughly 19 cents in earnings per quarter. Right now, Nio loses money. They're losing money right now. Bank of America does not think they are going to be profitable until we get to somewhere around 2023. So here we go in 2023. I've got them profitable with these assumptions that I made. And this would bring them to about 19 cents in annual EPS. At a price of $50 per today, you're paying a forward price to earnings ratio of somewhere around 264 times. We'll remove the dollar sign there. You're paying around 264 times forward PE for Nio. That's a little bit on the expensive side, especially if we pop on over to Tesla, which I've done my Tesla analysis so many times. I'm not going to go crazy going deep on this Tesla, analysis here. So let's just go down to the bottom line. If we take my latest Tesla analysis of a reasonable end of 2022, or I should update this to mid 23 price target of $729 per share, today you're actually only paying 27 times earnings, forward earnings for Tesla. When you compare it this way, this makes Nio about 9 times as expensive per earnings revenue for 2023 going forward. Now, earnings for Nio will be very, very small in 2023. So in 2025, it might not look so bad. This is why I have come up with my strategy for Nio. Right now, yes, Nio is much more expensive than Tesla. But if they can hit margin and they can get their SG&A down and they really can capitalize on their battery as a service technology and their viral style marketing, which they believe is very powerful, they say that 40% of their sales comes from people who own Nio cars. So it's like you have a Nio car and you're so excited you tell your friends about Nio. Well, if that's true and they can get their advertising costs down and they can get these margins up with the fact that the CCP is running this manufacturing plant, maybe it might make sense, for me at least, this is what I'm thinking. For every $1 I put into Nio, I'll probably put $4 into Tesla. And that's possibly because I'm being a little bit more conservative here. I do feel like we're a little bit stretched on Nio, and we don't yet have the confidence that JAC, which is not a company that we get to listen to their earnings calls on, it's a state-run facility, we're not as confident that we're going to see that margin there. It's pretty pricey right now. Would I like Nio back at $19 per share? Yeah, absolutely. And in that case, I'd like to go a little bit more heavy. At these prices, look, I still believe Nio has the potential to double in value over the next 3 to 4 years. And it might happen sooner. Every time I come out with a new price target, it seems like the stock market hits it way before I can even react to it. For me though, if I put $10,000 into Nio, I'm probably throwing $40K into Tesla. And I'm probably going to be investing at that ratio, mostly because I'm a little bit concerned about the valuation and I'm not sure, are we actually gonna hit this profitability in 2023? Are they actually going to be able to maintain that luxury segment? Or is Tesla just gonna bring the cost down on their more luxury cars like the Model S and X, bring those over to China and make it a little bit harder for Nio? Or is Nio gonna come to the United States? A lot of questions here. I don't think you want to short Nio. Like, I wouldn't bet against Nio, but I will say if you invest in Nio, you better be in Nio for the long run. I'm an investor in Nio. I'm not going ultra heavy on Nio. I've given you my ratio, but I'm also prepared for some big downsides. It's entirely possible that Nio falls back down to like $25 a share, in which case I would be happy to buy more. As long as they stay on this trajectory, I'm impressed by the company. I don't necessarily agree with ARK Invest that this is a winner-take-all situation, and instead, I'm very interested in having some exposure to Nio because I think their battery-as-a-service technology is fascinating, and I appreciate their openness to LiDAR. So, there's my take on Nio and how I'll be investing in Nio versus Tesla. Remember to check out the courses linked down below to get my detailed perspective as to how I do these analyses, and folks, we'll see you next time.